Blue chip stocks, the pinnacle of stability and profitability in the stock market. These companies have stood the test of time, weathered countless economic storms, and consistently delivered exceptional returns to their shareholders. But you might be wondering, how can I, as a beginner, get a piece of the action? Well, my friends, you're in the right place. In today's video, we're going to unlock the secrets of investing in blue chip stocks for beginners. We'll take you by the hand, step by step, and guide you through the process of understanding what blue chip stocks are, why they're so coveted by investors, and most importantly, how you can start investing in them, even if you're a complete newbie. So before wasting any time, let's dive into the video. What is a blue chip stock? A blue chip stock is stock issued by a large, well-established, financially sound company with an excellent reputation. Normally, such companies have operated for many years, have dependable earnings, and usually pay dividends to investors. A blue chip company typically has a market capitalization in the billions. It's generally the market leader or among the top 3 companies in its sector, and more often than not, is a household name. For all of these reasons, blue chip stocks can make good investments and are among the most popular stock purchases for investors. Some examples of blue chip stocks are IBM Corp., Coca-Cola Co., Microsoft, American Express, McDonald's, and Boeing Co. Understanding a blue chip stock. While dividend payments are not absolutely necessary for a stock to be considered a blue chip, most blue chips have long records of paying stable or growing dividends. A blue chip stock is generally a component of the most reputable market indexes or averages, such as the Dow Jones Industrial Average, the Standard & Poor's, S&P 500, and the NASDAQ 100 in the United States, the TSX 60 in Canada, or the FTSE Index in the United Kingdom. How big a company needs to be to qualify for blue chip status is open to debate. A generally accepted benchmark is a market capitalization of $10 billion, although market or sector leaders can be companies of all sizes. For example, the T. Rowe Price Blue Chip Growth Fund doesn't have a specific guideline for what type of company qualifies outside of its focus on large cap and mid cap companies that are well established in their industries. Its top 10 holdings have market capitalizations that range from over $670 billion, Tesla, to over $2.4 trillion. Did you know? Blue chips get their name from the game of poker, where a blue chip has the highest value and is the most attractive to players. Are blue chips good investments? Whether or not blue chip stocks, or any other securities, represent a good investment depends on an investor's financial needs, investment objectives, diversification goals, risk tolerance, and investment style. Nonetheless, blue chips can play an important role in a portfolio. They provide a useful combination of growth and value characteristics that can balance the ups and downs caused by economic distress and market volatility. The companies are consistent, top performers with solid fundamentals, and income from dividends is usually dependable. Reinvesting dividends harnesses the power of compounding, which is always a plus. How do you invest in blue chips? You can buy blue chip stocks from the brokerage firm of your choice. While brokerages differ in the small cap investments they hold, you should be able to find blue chip stocks with any major brokerage. There is no need to be an expert to invest in blue chip stocks. The process is the same as buying any other stocks. No matter what type of stock you are purchasing, always research the company first by looking at historical stock prices, earnings reports, and dividend payments. You may also choose to consult with an investment advisor. When trying to choose the best blue chip stocks, you should also consider their industry. Some industries are more likely to grow than others. A company might be able to pivot a product or service, but it's still smart to look at which industries have the most growth potential moving forward and which industries are starting to die out. Stocks are a liquid investment, so you can sell your blue chip stocks at any time. It's recommended to hold them long-term for the best returns, but you aren't required to do so. You can buy blue chip stocks as individual stocks or through a blue chip index fund. Individual stocks are an excellent idea if there are particular stocks you believe have substantial gains. Individual blue chip stocks have greater risk, but may also outperform funds. These stocks are often more expensive than stocks from less established companies. However, that doesn't have to stop you from investing in blue chip stocks with a low investing budget. While a higher cost may have limited who can invest in these stocks in the past, the popularity of fractional investing on the rise has given more people slices of stock shares. An index fund or ETF is a great option for blue chip stocks because it helps diversify your portfolio. When you buy an ETF, you automatically have exposure to tens or hundreds of stocks. If one of your stocks decreases, it's usually balanced out by the other stocks that increase. Before we continue, make sure you hit that subscribe button and ring the notification bell so you never miss an update from our channel. We release valuable content like this regularly, designed to help you make smarter investment decisions and achieve your financial goals. Also, if you find this video helpful and informative, don't forget to give it a thumbs up. It lets us know that you appreciate the content and encourages us to create more videos like this. And of course, if you have any questions or want to share your thoughts, leave a comment down below. We love hearing from you, engaging in meaningful discussions with our amazing community of investors. All right, now that we covered that, let's dive back into the exciting world of blue chip investing and continue our journey to financial success. What makes a company a blue chip? Blue chip stocks are the titans of their sectors, industry-defining companies that are well-known, well-capitalized, long-term stable plays with solid financial prospects. What is an example of a blue chip company? Number 1. Apple. Apple is the world's largest company by market capitalization, and therefore, the foremost blue chip stock. It is one of the most recognizable brands of any company on this blue chip stocks list, and is well known as a premium product. This blue chip stock manufactures hardware, produces proprietary software, and provides services that work seamlessly together. Apple is a lifestyle brand. It's in everything you do with your phone or tablet and has been for decades. The original mouse was actually invented by Apple back in 1979 when there were no computer mice made yet. That means not only can we expect many more years from them, but also new innovations as well. Consider this one of the best high-quality stocks, which qualifies as a long-term investment for your portfolio. Their steady growth and proven track record of past performance show this blue chip stock has a place in many investors' portfolios. They also pay regular dividends, making them a great passive income idea for most investors and worth considering as one of the individual stocks in your diversified portfolio. Stay tuned for the continued market dominance they seem to command. Number 2. Walt Disney. Buying shares of Walt Disney stock for your diversified portfolio might make sense for beginner investors and seasoned vets as well. Buying this blue chip stock might bode well for you as a buy and hold investor for the rest of your life. 2020 didn't bode well for the House of Mouse's income statement. The company's theme parks and cruise lines were shuttered because of the pandemic and economic downturn, causing it to turn in its first loss in 4 decades. Not a report card anyone wants to bring home. But who cares? Do you want to watch Disney classics any less? Doubtful. You and your kids still love Disney, and investors do too. Perhaps you've noticed this blue chip stock price sailing to all-time highs despite the short-term setback. Why? Much like a strong investment portfolio, it has diversified its business across several different areas. The entertainment conglomerate weathered the storm and will stick around for many years if their Disney Plus business has anything to say about it. The takeaway: no matter your status as a young investor or seasoned futures market trader, don't be so risk-loving that you keep all of your money in one stock. The largest companies have a well-established core business, but generally speaking also have several areas of their business to diversify how they earn revenue. And there you have it, folks. We've reached the end of our incredible journey into the world of blue chip investing. We hope you found this video valuable, informative, and empowering on your path to financial success. Remember, investing in blue chip stocks can be a game changer for your portfolio, providing stability, growth, and the potential for remarkable returns. By following the strategies and tips we shared today, you'll be well equipped to navigate the stock market with confidence. If you enjoyed this video and want to stay connected with us, be sure to follow us on our social media channels. We post additional content, investment insights, and updates to keep you informed and inspired on your financial journey. And don't forget to check out our other videos, where we dive into various investment strategies, share expert interviews, and provide valuable resources to help you become a more savvy and successful investor. Thank you so much for watching, and as always, we appreciate your support. Remember, the key to success lies in continuous learning, smart decision-making, and staying disciplined. Keep investing in your future, and we'll see you in the next video.